real estate comes with risk. Absolutely doesn't have to. We have to rethink that.
Hey, everyone. Thanks for listening to another episode of Buildings 2.0, a podcast highlighting the voices that are shaping our built environment. Today, I'm speaking with Matthew Schneider, founder and CEO of Building Inc. One word, trust. He believes the most fragmented corner of the global economy, real estate, stays that way on purpose. And there's just a lot of fragmentation, a lot of things we have to work through in terms of data, what it means, and what the new economy of real estate could look like. So, Matthew, thanks for joining.
Jose, thank you so much for having me. I love the name, Buildings 2.0. I mean, my company is called Buildings, so this is going to be an exciting conversation.
Yeah. So Matthew, I'm stoked to have you here. I think what you've been putting out, what you're working on, is incredibly timely. In plain English, for those that might just be hearing of you for the first time, what does Buildings Inc. do?
Well, Building is focused on organizing, verifying, and delivering a property data. I think that's the right word. There's a lot of buzzwords and keywords in my head, but if you asked us what our priorities are, it's definitely organizing data, which is sitting in disparate systems, verifying that because real estate is all about trust and authenticity, and then delivering that. Does it go to a dashboard, to an appraisal model, a waterfall calculation, someone else's software, or an investor's email? Right. That's the life cycle of data. That's what Building is focused on, and we carry that out through our digital platform.
Yeah. Double click on that. So Buildings we could be talking about a lot of things: photos, images, spreadsheets, old leases. How do you think that through? How does Building assess what the data coming in, and how do you actually verify it?
Yeah, there's a lot to unpack there, certainly. So first, when it comes to data, I definitely think of it as a broad category. So while some tools are just looking at financial data or others for geospatial or maybe BIM and scans, what's really important about real estate is understanding context of properties. It really is a knowledge graph. Everything is connected in some way. And so the first thing that we wanted to do is make sure that all of the data that usually doesn't get to interact finally has some overlap. And this is valuable beyond just being organized. There's opportunity for recognizing new trends or performing reconciliation. If two different documents or stakeholders had different truths, we have to resolve that. So first and foremost, it's about connecting to systems or databases that usually have their own silo of data and bringing that all into one concentrated place. And this is becoming more commonly known as like a golden copy, a single source of truth for that property, rather than some files circulating over communication, others trapped in someone's laptop on an edge. We want one place where data can flow into. We take a unique approach to that in saying that it doesn't actually go into our database in that process. We don't provide a database, but we do help orchestrate the systems you already use and create sort of a federated model. So that's the priority. Second, data is portable. You can move it, but does the trust always follow? Data is information. It could be something as simple as a picture. It could also be geospatial information. It could be coordinates. It could be financials. It could be a receipt. That's all data. It's, just as it exists. That's been produced by someone, and other people are going to have to understand that and then make decisions off of that. And in that process, that's where it's sort of a black box. We go from a document or data, numbers, and then we have to make a decision off of that. That could be worth millions and millions of dollars. So the question is, what happens in between there, and what can we preserve in order to make the end result a little bit more workable? Context is one. Metadata, like who, what, when, where, why, how. That's great. Also credentials. What engineer produced this? What city inspector signed off on it? And how does that impact how quickly I can then approve this property, or how quickly we can underwrite it, or how comfortable I am insuring it, knowing that it's compliant. I had the data, but did I have the trust and the understanding of that and turning data into information, which helps us become more intelligent, which evolves into wisdom throughout the life cycle of the property? That's what we really need to understand. And so Building said, yeah, we want to move data, but we also want to move trust. We want to move understanding. And in the age of artificial intelligence, where we're trying to make decisions faster, knowing that the data could be cryptographically verified, or it's fingerprinted, or there's credentials assigned to it, and it's also, the system is checking if there's any conflicts with that, like if other documents say something else. Well, now we know that when AI interprets that and gives us an answer, it's coming from a good data set, like garbage in, garbage out. And we wanted to mitigate against that.
Right.
Also, AI agents, like if whether as a person operating on this or AI, you have to have governance before we execute on something. Do we know that we're working with a good substrate of data that can also be trusted? And in our opinion, those things precede intelligence.
I want to get into the process of like how do you think about the verification process? But before getting into that, who is most impacted through bad information? Like, can you paint a picture as to what that customer client organization looks like?
Well, a lot of folks are impacted by bad information, assuming that they have a stake in the property. So if we look at like a property owner, a lot of the responsibility falls on them. And they definitely want to make sure that they've got their ducks in a row. They own the property, they're signing on the line when it goes to get insured, they have the entity, they got to show up in court, all that type of stuff. So everything is really on their shoulders. But that's not to say that other stakeholders couldn't be punished or have consequence when things go wrong. If you're an investor, you have financial loss. If you're a lender, you have risk. If you're an insurance company, you have payouts. If you are just an engineer or someone doing work on the property and you're doing bad work, maybe you're liable for something that happens down the line. So there's a lot of people who are on the receiving end of a consequence when a property has bad work, bad information, bad documentation, bad understanding, which therefore leads to maybe inadequate operations or overexposure, whatever it might be. I know that was a really broad answer, but you can imagine that this sky is the limit.
In your experience, who do you think might be the biggest advocate or needle mover? What I mean by that is it the executive? Is it are we looking at, say, the CEO of a large, you know, development company or portfolio, or is it the project manager on the ground collecting documentation? How do you think about it? There's a lot of folks around the table, right? We
Mhm.
could be talking about the executive, we could be talking about the design and construction team, the procurement team, property management. Who, in your view, is helping move the needle the most?
Well, although there's advocacy for this at the lowest rungs, people in the field who are doing the rework when things weren't done correctly the first time because maybe there was miscommunication, or the folks in procurement and supply chain who have to try to sift through a gray area and still push a deal forward. Although there's advocacy from them, ultimately the decision comes from the higher ups. And so the question is, can you realize enough of a gain from better transparency and efficiency to roll out new software or processes or integrations? And I think for the longest time, the industry resisted this. The senior execs have always neglected how much better the industry could be. Because you've always had people who say, we don't know what's going on the job, or we're an investor and we took a loss. And it's always been, so what? This is just how the industry operates. Now we're at an interesting inflection point in which compute is so subsidized and cheap that opening up a new AI tool and using it in a portfolio is no longer super expensive. And yet the gains are very recognizable. And so now you have this competitive landscape where some firms, especially those that are forward thinking, are absolutely diving in. They're very eager to figure out how they can scale faster. And this is pushing all of the senior leadership across the industry. It's forcing their hand to adopt new platforms, new tools, and technology and saying, okay, we'll invest in a better way to manage our data, or we'll start using this AI tool, or we will integrate digital twins. Whatever it might be, their hand has finally been forced because technology has just come long enough that in a thin margin industry like real estate, it makes sense.
Yeah. I'm an executive of a real estate portfolio, 50 locations, warehouses across the US. How would you define success for me? So what if I said something like, well, Matthew, love what you're saying. Yes, we're a little messy. We've got some old documentation. It's kind of cost of doing business. But we'll be fine. How would you kind of like, what am I missing? What am I getting wrong? And how would you define success for me?
So I'm taking a note so I make sure to get through all these 3 points. First, I'd start with the immediate cost. So this is what people see, that maybe diligence takes a long time, or you have to hire people to collect and input data into different things, legal, or whatever it might be. There's a cost. And as you said, it's sort of a cost of doing business. And there's going to be something that I bring up later, which is that it doesn't really have to be. Right now, there's costs. And so if you can compress the amount of time it takes to do any given task, whether that's designing, building in which you have interest, or if it's the middle and back office and you're paying people, the faster you can do that, the less hours spent, and therefore the less money spent on that particular task or project. And so if you realize the same upside, if you sell it for whatever, but your line items are significantly cheaper, then you have a better bottom line. You have a better profit margin. So just finding ways where you are incurring a lot of cost because we're disorganized, or we had to redo this, or the other party spent weeks going through this, and then we're getting billed hours as they red line everything and then return that back to us. That's all cost. You could also look at cost as spread. So when you go to sell the property, if there's issues, you're asking a certain amount, the buyer will identify the issues and say, we'll come in a couple $1 million lower. That's a cost right there. You're being discounted because maybe this isn't as high of quality as you're claiming. You're not transparent. There's potential issues that could resurface in the later, or the risk is simply too speculative and they need to protect themselves to the downside. So that's cost. Second, you have opportunity cost. So when you spend a lot of time working on something, or going through the diligence process of a deal, or being underwritten, or trying to transact in months, it takes months to go through that. You could have already transacted. You could have already been deploying capital. And then if at the end of all that, it falls through, now you have to restart that process again. So opportunity cost is tremendous because capital that just sits is not very valuable. You don't get a return on investment when you could have already redeployed 100 million or 200 into something that's paying an 8% preferred return. And now you're missing out on that. So opportunity cost, plus by not implementing technology that is going to help you work faster, could you have already developed another property by now? Could you have scaled your portfolio, but you didn't because you're working in an old school, slow fashion? That's big. And then you brought up the cost of doing business. So a lot of cost is not obvious to people. It's baked in. They say, "Oh, that's the cost of doing business. Oh, I've got bad covenants and a high cost of capital. That's just the cost of doing business." It's not always obvious to people because it doesn't straight out say like we're low confidence in this, so you get a higher interest rate, or this isn't transparent enough, and the majority of investors, 50% of investors, are going to pass, and therefore it's going to take longer to fulfill this and higher investor acquisition cost. Nobody says that outright, but it absolutely exists. If you don't have a low risk or high transparent deal, you are going to be receiving the short end of the stick in a lot of transactional items. So there's unintended consequence, or something that's difficult to calculate by not being completely prepared in your property's diligence and oversight, that other parties will certainly punish you for. Or maybe it's the illiquidity of the industry, or the discounts that people incur when they try to exit a deal early rather than parking their money for 5 years. And people say, well, that's just happened. That's how this industry operates. It's real estate, comes with risk. Absolutely doesn't have to. We have to rethink that.
Right. If so far, I like what I hear. Again, I'm just role playing here, but like I like what I hear. It sounds good. How do I think about budgeting for Building Inc? Like, is this a software line item? Is this a consultant? Is this a services? I mean, it's not lost. I mean, you're touching on a lot of things here that is often spread across multiple departments. How do I even think about budgeting for something like this?
Certainly. Well, as we roleplay the whole sales conversation, I'll admit that I don't usually get so excited towards
I love it.
people. I'm wearing a visionary hat, not a salesperson's hat. So
I love it.
don't worry, when we're on the right call, I'm not yelling at you about data and how excited I am. So
Mhm.
if we were in a realistic sales conversation, one thing that I would point out is that with a platform like ours, it is no more expensive than Claude Enterprise, and it has more robust possibility and capability than such a thing because we have the data, we have the context versus dragging and dropping files into Claude. And we have a decent amount of blockchain and general software and artificial intelligence that makes this a real deal. Now, you pay per property that you are bringing on, but what we've seen is it's extraordinarily valuable. So there's a small investment into technology. It's a subscription, that's software as a service, but between the costs that you cut out, the opportunity costs that you reclaim, and then the unknown costs that we are helping you fight against because hey, you could get a lower cost of capital, or you could be more attractive to investors, or you could have secondary market liquidity. All
Gotcha.
of that adds up in the end. And if you can make this property more valuable, we're even seeing that properties can command premiums, not just remove the discount because of the unknowns, but command a premium. If you made an offer and you said, would you like the property with or without 10 years of cumulative verified data, like a Carfax? What do you want? And people will always say, yeah, of course. Tell me how this has been maintained. Give me the systems. I
Right.
want everything. And I want the AI that has been trained on top of that. Sounds brilliant. Great. What are you willing to pay for that? And people are going to start crunching numbers. Oh, an extra 1%, 2%, 5%. And that's millions, just because this is now an extremely low risk investment. And then what I'd say is, sure, $200 per property per month you put on your portfolio. We haven't even talked about accounting treatments and regulatory capital release. Probably not fit for this conversation, but let me say this. You don't get to just make up the number that you have for your property. I know people are used to Zestimates and Zillows, but it's different for commercial properties in the appraisal process, and especially for funds. They are very calculative and quantitative about value and risk. And so they need to know what that property is worth at a given time, how to hold that on their balance sheet, and what happens when things go wrong. And so for a small price to be better managed over your data, to be more transparent, and then we can help deliver that to the appraisal tools or to the calculators and the fund administration software. And it actually changes like how much money you have to park in your reserves in case the property has an issue. You could be freeing up hundreds of millions of dollars at the institutional scale.
Yeah.
That's a good deal.
So, okay. All right. So I have 30 properties, $200 a month. So I'm looking at a $6,000 a month investment. And in exchange, what I'm hearing is that we'll have the ability to collapse what seems to be like a variety of different functions, I assume, from lease document verification, connecting of the dots here. To your point, how do I think about the differences between, say, one of these foundational models like a Claude versus building, and like what are kind of these, what are the frameworks here that take the thing to the next level? Like how is 1 + 1 = 11?
Yes. So what's really important to know about something like Claude is that trust is not embedded into that system. So if anyone has ever gone through the life cycle of a real estate property, diligence, underwriting, transactions, assembling the data is one thing. So could I drag documents into Claude and it gives me a synthesis, or it maps it to an Excel sheet? Yes. Then you hand it to the other party, and that's where things slow down. They always slow down. Absolutely, because that needs to be inspected, sometimes even audited. And so while you saved a couple hours putting everything together, you did not save any time on the trust factor. And then they're going to say, I need to see the source documents for this. You gave me a bunch of numbers. It's not linked to the source. And then if you say, okay, well, I'll email everything to you, they still have to assemble all of that, connect it to the cells, and go through that again. That's where things slow down. That's where errors are revealed, they surface. And so we said, let's first of all compress this. Let's bring it into one place. Let's concentrate it so that you can click on a cell and it takes you back to a pre-verified document, and you know who, what, when, where, why, how. You can see encryption. You can see how this has been handled over time, what version it is. That's fantastic. It's like giving everything to the counterparty as a present with a bow on top. So now you've moved data, you've also moved trust. So we saved you time in assembling the documentation and taking data out of that, but then also helping the other party do that as well. That's the game changer. And the fact that they can properly perform their diligence and trust your asset and be able to jump over to operations or FM or financial all in the same place, whatever you're granting them access to, and fully understands the property that they're dealing with. So that's tremendous. Second is this idea of persistent data or cumulative intelligence. So properties have a lot of information, and they need to grow on that over time. If you are episodically assembling that, or if you're dragging a couple files into Claude when it makes sense, and you aren't giving the full picture, the AI is not going to be robustly intelligent as it pertains to your property, and especially not across an entire portfolio. Then you hand that over to, let's say, a new owner. Are you giving them the sign in to your Claude account? Or are they restarting from scratch? They receive some documents and then they have to train AI on top of that again. So the idea is that data accumulates over time and it's good data and it's locked to this property. And then we learn more about these and then we have tools on top of that. So it is to bake a wedding cake, you have to think in layers. You have to have a really strong foundation. Hell, I don't even have to use a wedding cake analogy. I can talk about a property. To build a big skyscraper, you need a strong foundation. Then you set the structure and then you start working through it. And it's the same thing here. Are we working with data and trust as our foundation before we start jumping into a bunch of different tools
Right.
that don't understand how real estate deals are conducted?
Yeah. Talk to me about that foundation, because I think, as you mentioned before, garbage in, garbage out. So one thing is to be able to collect documentation, centralize it, pull information from it. But how do you view verification? Like, what does it mean? Like, if I hand you a set of leasing documents or whatever, right, floor plans, one thing is the documentation itself. In our own experience, we've learned that most of the time, specifically with properties, if I have PDFs, they're probably 17 years old, out of date, sometimes non-existent, right? So talk to me about that verification layer. Like, what does it mean to verify? And when documentation is coming in for you to assess, how do you create a baseline? Like, how do you think about that?
Yeah, absolutely. First, I'd like to begin by saying that Matthew Schneider nor Building are verifying your documents. We give you the tools to do that. And that actually puts you in a better situation because your stakeholders are credentialed, they're trusted. You could be working with Cushman or a law firm or whoever it might be. And they're better off to look at a document and determine if that's right or wrong, or if it looks right at a certain time. And if we need to reference it later, if we can understand what we were working with in that context. So what happens is as you start concentrating different files from different systems to one property, we go through several different stages of that file's life cycle, if you will. And I've written papers for IEEE and BCCA, like all sorts of different events, so that we took a very academic approach or even institutional, which was as we work with files, how do we give them different classifications based off of claims? So you first register that a file has been identified, it exists. You figure out what type of file it is, what property it belongs to. That's the baseline. And once that's done, we give what's called a hash. It's a fingerprint. Think of it as a fingerprint. Here it is at a given time. It's a unique one of one string of numbers for this document. If one word or one pixel changed, it would get a new string of numbers, a new fingerprint, and we would match those up and we would see that they're different. So that's just the state of the document. We can show that the document or the data was this at a given time. And if anything changes, we will be able to identify that. Now, let's move that over to a credentialed individual. They're licensed, they're professional, they have a firm behind them. They look at that and they say, this document as it is right. We're going to sign off on that. And the way that we embed that is cryptographic. So what this means is, because of course, a contract could have signatures on it, or you could put a company's stamp on a document, but that's forgeable. It is not immutable. It's not provable. So we actually set this up in a way that you can independently, mathematically, without a shadow of a doubt, prove that the document was this and that this person was involved in credentialing it. From now until the end of time, it doesn't matter if it's in my system or yours, you can see that fingerprint and those credentials. So it's confirmed in that way. So that's incredible level of authenticity and integrity that exists in these documents. Now, you open up the doc and you see it's 16 years old. Well, maybe that's not something that you sign off on at a given time. You say, let's get the latest version, let's look into this. But in order to make that much easier, because there's a lot of information in properties, we help template that and we apply artificial intelligence on top of that. So first, we don't throw you into the deep end. We're saying we're looking for these 100 documents. If they're present in the systems, we'll identify that. If they're missing, you get a little red bubble. And if they're sort of there but questionable, you'll get an orange bubble. And that at least gives you a firm foundation to stand on. And you're like, okay, I understand where I'm at, what I'm working with, and what I need to work on. You bring in files. If two files have different truths, we'll identify that. If a file is really important, like it might be used in appraisal, and it hasn't been signed off on or credentialed, we'll flag that. Now, we're not requiring you to do that. If your appraiser says, I don't need that, then they don't need that. However, the idea is to be ready so that if they do say, let's get all this stuff ready, or you're looking for a new mark on the property, or you're trying to tokenize it, you're already ready because you know what the steps are. You're prepared. And the idea is that when you do that properly, you compress these timelines tremendously. For someone who doesn't care about their portfolio, will they be super proactive? Maybe not. But for people who are trying to scale and they want a solid foundation and they're trying to use AI tools and they want competitive cost of capital and they're running a multi-billion-dollar operation and they don't want to be sued, yeah, they have protocols in place. And they say,
Right.
upload this, sign off on it. These people are responsible and move on. It's not do whatever the hell you want whenever. Like there's real process. And so we help instill that and guide people through here's what you upload, here's how you sign off on it, here's how you make it available to people, here's how you push it to different models,
Right.
workflows, as we call them.
For a non-technical person who's heard the term, associates it with blockchain, how should I think about this? What is different about tokenization as opposed to, say, any other method that's maybe digitalized process? For a non-technical person, how do I understand this? Like, what does that mean, and why does it matter?
So definitely shifting gears in this conversation, bringing up tokenization. So tokenization is built off of a technology called blockchain, and I know that I've mentioned that, and I'm a big fan of it. Blockchains are ledgers, but they're immutable. So if we're moving information in real estate, and we have different parties involved, and there's value, we definitely want trust in our books. The way
Right.
things are recorded, we want to be able to reference that, trust that, be able to share that. Blockchains are the perfect mechanism for doing that. The financial industry in particular has been exploring additional use cases for blockchain. And one of those is a process called tokenization, which says, what if we take normal paper contracts or stores of value or assets or identities and
Right.
solely work with them on the blockchain? Because it's faster, it's more transparent, we have less counterparty risk. And in real estate, that totally makes sense. So people started saying abstractly, let's tokenize real estate. Let's move the contracts on. Let's move the ownership. Let's have data receive fingerprints on these blockchains so that we can double check and trust, is this current? Is who was there when it was signed off on? All that type of stuff. So when I talk about tokenizing real estate, it just means, hey, we're trying to move this onto a ledger that's more transparent, is immutable, and is global. So it's quite simple in that capacity, but it's taken the world by storm because of really the operational efficiency that it brings. When we can trust one another, or when a transaction becomes trustless, like we know for sure that it occurred and who was involved in that, this
Right.
whole industry moves a lot faster, especially money. A good example, non real estate related, is when you wire money, or when you do ACH or anything, although it feels very instantaneous, there's a lot of back office that is happening. Each bank, each intermediary, each clearinghouse, each settlement company, each payment vendor, they all have their own books and they have to double check with each other. And sure, they use APIs and they quickly try to reconcile things. But the reason why there's still settlement times and things can bounce and like you can send a wire, but there's issues within that is because our books aren't aligned. Like we have to check with one another, and sometimes things get by because party one says good to go, party two says good to go, party three didn't get a say, and it was really important. And then party four is already settling, and then we're like, oh, we gotta walk this back. We have to fix something here. Something went wrong. There was fraud. The money wasn't there, or is intercepted. Whatever that might be. Blockchain is just A to B. It's A to B,
Yeah.
and it's on a books where everyone can see. Yep, transaction happens. The money was there. Now the money's here, and so it clears. All right. So going back to real estate. So people said, let's take equity, let's take debt, let's take title and deed, whatever it is, something that we for sure want to know whose hands it's in and if it's been transacted, and start recording it on a blockchain. And I'm really excited about that because what happens is for for a market, not just an industry, but for a market like real estate and private real estate in particular, which has always struggled with liquidity, it's struggled with pricing and understanding risk. As we move information and value onto these big trusted ledgers, that means like the asset class unlocks. We can move money in and out at the same rate as other investments. If we're talking about bonds, if we're talking about money market funds or treasuries or whatever, or public equities, where all that price and data and understanding exists and settlement is quick, we could apply similar principles to real estate. Not overnight, but we could definitely get there. And we could have reliable derivatives, like all sorts of banking and capital markets things, but it moves money. it will move money, and everyone wants money flowing into real estate, and they definitely want money flowing in where risk is adjusted. So yeah, can I put a lot of money into a real estate project? Sure. Am I getting good value for the amount of risk I'm incurring? Maybe not. We can flip that around.
I'm super inspired by both the vision as well as the story here. And it's not lost on me that as you're trying to execute on a lot of this, you're going up against a variety of different like entrenched ways. Talk to me about a little bit about building the business itself. What inspired you to start building? How do you see the team growing? Maybe in 2-3 years from now, like what's true? What are you building?
Yeah. What am I building? Well, that name was so purposeful. Of course, it's a noun, it's a verb, but it was this inspiration that we're building something big. Like we wanted to advocate for people who are working with their hands, but also building portfolios and trying to go out and change the world. So it's as symbolic as it is literal. And
Yep.
building it's my second company that I founded a couple of years ago. Spent a lot of time in research, development, partnerships, getting everything right. The concept seems pretty simple now. And if you look at the platform, it's a platform. There's different pages. You click on it, things show up. However, the back end and the understanding of this and how everything plugs in takes a little while. In order to arrive there, it wasn't just research and systems and diagrams and research, sorry, not research, but like academic thought and collaboration,
Mhm.
worked with industry standards, whatnot. It was a better understanding of where real estate falls short. And with my first company that was dealing with syndication, I had this realization that everyone wanted to be financed, but not everyone was finance ready. And then maybe they could organize their materials to impress us once, but could they do that in perpetuity? Could they constantly provide updates about the performance of the underlying asset? And if they do, is that just arriving in a dashboard or a newsletter? Or is this actual tangible value, like the true number assigned to the property? Because
Right.
of course, I can open up my cap table management software and use a template to write an email, an investor email or a newsletter and say, things are looking really good. We had a new lease signed, blah, blah, blah. So what? Can I trust that? Can I act on that? Is it realizable value? The answer is no. It's always no, because there's absolutely no digital infrastructure. There's no digital infrastructure and there's no what I call information infrastructure. It's an absolutely lacking substrate in real estate. Working on these deals, working to raise capital, also seeing many of them struggle, or they were updating numbers like cap rates that shouldn't have been updated. At least, I mean, they were like rolling these out weekly. It's like, guys, this should be static. It's not something, go tweak something else. But they couldn't make it work. They couldn't make the project work. So they went for the biggest, boldest variable in the entire thing and said, well, let's just drop our cap rate from 2.5 to 2.25. It's like, whoa, you're already aggressive enough. And now you're just making that work. They never got off the ground. A lot of investors are mad at them. Uh, I said, there needs to be a more transparent approach to real estate. We need to start thinking in full life cycle solutions. As AI comes around, we also need to be thinking data and trust first. We can't be distracted by the shiny object, which to many real estate developers, AI is. I know it's really cool. And I know that Claude Code makes you feel like you can build a huge enterprise stack internally. The answer is probably not. It has flaws. And then it also doesn't cross borders. What you built inside doesn't become market infrastructure. It doesn't convince another party. Again, interoperability and counterparty trust is tremendous in real estate. You can have fantastic internal operations. You could have had that without AI just by hiring a bunch of people. Doesn't necessarily change how you're perceived in the market or how capital flows. Okay, cool. Rant done. But I had all this flowing through my mind as like, there has to be a better way. And then a couple technologies showed up. I've been an advocate for BIM for a long time. And you know that in Europe, between the Golden Thread and ISO 19650, and also just government regulation, they've been incorporating BIM in many projects and increasingly smaller projects. It's becoming mandated. In the US, it's encouraged, but it is not super widespread. And where it is, it's low fidelity. So how do we improve that? How do we build better? And also, how do we make that affordable for folks? So I definitely wanted to include BIM and digital twins within the stack because totally makes sense to have a digital equivalent of your property. Some data is two-dimensional. Some data should be three-dimensional. It's easy for people to understand it that way. So all of that came together and I was like, all right, yeah, we're going we're launching building and we're going to fix this. Now things are looking fantastic between the customers that we're working with and our partners and our pipeline that which continues to grow. There's more demand than we can immediately fulfill. So what that looks like in the next couple of years is, well, right now raising a pre-seed and then hiring people and satisfying clients, which many of them are turning into institutional or even international. Just, for an early company, that's a lot of demand. And we want to make sure that we're adhering to our principles of compliance and doing things properly. So we've got that under our wing. And then outside of that, it's conversations like this that do move the needle forward. It is education. It's helping people understand this in a way that is hopefully not frightening and hopefully fires them up to say, innovation is here. Real estate can move forward. We can do things better. We can build bigger and faster and at a good cost. And we're going to start to prioritize data and think about systems, become systems thinkers and how we can connect to things. And then on top of that, you have this wealth transfer that's happening. So trillions of dollars moving into people who are more digitally native. And so they are very excited to figure out what new tools they can apply rather than being resistant to that inherently. We trust technology now. It's demonstrated. So let's apply this all throughout and we understand it and we can teach folks how to use it. So we're capitalizing on that wave as well. But it's just an interesting time to be in prop tech. It's been wildly underfunded for the longest time. And now it is receiving capital again, because the cost to actually implement this has gone down enough that the gains that you receive from it now seem reasonable,
Right.
to real estate, which has thinner margins in some cases between construction and operating and even the transactions. So yeah, does that paint a good picture?
There, I think you cut out there just a little bit of the last few seconds there, but Matthew, this has been an absolute masterclass primer here on I think where we're heading here. For those that want to follow your journey, want to learn more, how do they reach out to you?
I'm very active on LinkedIn. I will post educational things as well as different events that I might have spoken at or that I'm attending. And I love networking. So if you see that I'm out there, please, let's get involved. So Matthew A. Schneider, I include my middle initial. Hopefully that makes it easier to find me. Blue profile picture, a very serious face. I stand out. You'll know it's me. Outside of that, if you want to check out building, www.building as an incorporated, that's our website. We've got a lot of good educational resources between articles that we write or podcasts that I've been on, as well as our big knowledge base or publications. There's so much that we're trying to do for the industry to help people understand real estate better, to understand digital transformation and tokenization, how construction and real estate and capital markets are converging and creating a new, very well capitalized giant. Very exciting time there. And hell, go start some companies. And if you want partnership there, like reach out to me. And then of course, I think Jose, I'm going to bring you on my podcast, which is called Code and Concrete. And we also talk about the built environment.
I
So
love
you
it.
can find that on the major streaming platforms.
I love it. Matthew, this is super fun.
It's been great. It really has been.